Says Aussies need to change their stash their cash approach to investing and saving. Here to give us some tips on how to invest during this pandemic period is Heinrich from Lightbulb Wealth Management. Welcome to you, Heinrich.
Thanks for having me.
Thanks for being here. Look, what investment sort of trends are you starting to see emerge, particularly over the last few months as we've gone through this pandemic?
Well, what we've seen from investors is a couple of mistakes. So maybe we start there. We've seen a rotation from growth assets into cash. And investors are probably making one of the most cardinal sins that you can make in investing, which is they're selling at the wrong time. So markets are down 20, 30, even up to 50% in some areas. And they're selling good assets at the wrong time. So rotating into cash usually is a pretty bad mistake. So we're seeing those mistakes. The opportunity for investors is to really have a solid plan and a strategy for times like this. So we saw during the global financial crisis, the same thing happened there. We had a huge sell-off over a longer period of time, but investors didn't have a plan, didn't have a strategy. And then when the market recovered quite strongly, which it has over the last 3 months, they've missed that recovery.
Right. So the thing is I guess the common thread is the panic and people sort of turning different ways, looking for a safe place to fall, I guess. Is there a safe place for consumers to invest money right now? What would be your comments to that?
Yeah, absolutely. So with COVID, I think the place to start is you need to think about the sectors and the industries that are going to benefit from COVID. So we think that COVID's going to be with us for at least another 12 months, maybe longer. So if you have a look at some of the companies that have really benefited since the onset of this pandemic, so Zoom, Temple & Webster, which is an online retailing platform, companies that are manufacturing PPE equipment, so personal protective equipment, so companies like Ansell, VIP gloves. These companies have really benefited from COVID over the last 4 or 5 months. And we think that those companies will continue to benefit over the next 12 to 18 months. However, investing in individual securities is inherently risky. And so there are other assets and ways that investors can invest to get exposure to a growing share market. So for example, we like sectors such as robotics, artificial intelligence, cybersecurity. And we think that these particular sectors within the IT industry have very long growth runways ahead of them. So the way that investors can invest in those spaces is through an ETF or an exchange traded fund, or find a fund manager that specialises in those areas.
So another sort of sector I guess it's seen a lot of growth is the buy now and pay later platforms. We see Afterpay was the darling of the stock market there, absolutely crushing it. Where do you see that sector going sort of over the next 6 months?
Well, in the short term, we advise clients on how to invest over the long term. And so over the next 6 months, that's really anybody's guess, and that's more of a speculation type play. We do like that sector. So a competitor in that space, in the buy now space, is there's a company called Tyro Payments. They compete against the big 4 banks in that FPOS space. The contactless payment area is a really attractive one. We think over the long term, in the next 6 months, it could still be quite volatile. But that's a nice industry and a sector to be invested in and to take a look at. And we also like looking at sectors that have been really beaten up during this COVID period. And often the best places to look for investments are the places where nobody's looking. And so if you think about the airline industry, you think about airports, anything connected with tourism and travel, that's really on the nose. They're really beaten up. So we like good quality assets like Sydney airports, Auckland airports, Flight Centre. You know, some of these companies we think are really going to benefit when we get through coronavirus.
Yeah. So what's the best way, I guess, of getting the right advice? Because I think there's a lot of people sitting at home right now going, I can just sort of, put a little bit here and put a bit there and do it on my own. Or is it best to get the right financial advice from a proper professional?
Yeah, absolutely. I mean, we believe that professional financial advice is really important. So I think the place to start is to talk to friends, family, anyone that's received really good advice previously. That's a great place to start. If you're not too sure, you can search the Financial Planning Association of Australia's website. You can search for licensed professional advisors there. But investing in individual securities, it is risky. And so individual investors need to, I think, do a couple of things. They need to figure out what their time frame for investment is. They need to identify whether or not they're actually going to be speculating or actually investing. And there really is a difference. So if you're going to be buying shares in a company and you're not planning on holding those shares or investments for at least 3 to 5 years, if not longer, then you need to be honest with yourself and that you're not really investing, you're actually speculating, and you could do really well, but your investment could go to zero. So I think it's really important to understand what your own risk profile is, what your time frame for investment is, and if you're not sure, then you should absolutely get professional advice.
Well, Heinrich Jacobs, thanks so much for sharing your insight with us this morning. We appreciate your time.
Thank you, my pleasure.